Hey guys, welcome back to another episode of Crypto Broke, where we're not just broke, but we are crypto broke. Here we cover cryptocurrency strategies, education, training in cryptocurrencies. Now, I am not a financial advisor. Please consult your financial advisor before doing any investing. Also, if you're interested in crypto trading, use our links below to support the channel. We're on Coinbase, crypto.com, and KuCoin for traders. Also, click that subscribe button, give it a thumbs up. Let's get into today's episode. So since I've been doing trading, I've looked at a bunch of different options, a bunch of different things, and I want to go over a method that I have found that seems pretty cool, and I want to see exactly how it works. So this is the Heikin-Ashi, a better candlestick. So we all know when crypto, with the candlestick patterns, it is a form of a trend, an average, a trend, whatever you may call it. But ultimately, this is a method that has been around for a long time. So looking at the formulas, the close and the opens, the high and the max. But let's look at the charts, guys. So looking at the charts, so these are regular candlestick charts. As you can see in here, we do have a lot of ups, we have a lot of downs, we have a lot of red candles, a lot of green candles. The Heikin-Ashi method actually gets rid of all of these in its entirety, and it tries to build patterns within these charts. So as we go through here, two differences with the charts. The Heikin-Ashi is very smooth, as you'll see when we get into it. Over on KuCoin, it works out very, very well. It is very easy to read. It is very smooth to read. You don't have to worry about a slight up or a slight down, a red candle, a green candle. It is more of a averaging pattern of where it is. So putting it to use, hollow green candles with no lower shadows indicate a strong uptrend. Let the profits ride. So that is when you want to leave it there. And if you're using this method, guys, I've been trying it for a while. Ultimately, you have to trust in the method. You have to not sit there and watch it because it does take a while. You do want to use a longer candle or a longer time frame. Ultimately, hollow or green candles signify an uptrend. You might want to add a long position or exit short positions. Candles with a small body surrounding by an upper and lower shadow indicate a trend change. That is really what we want to look at. Those are called the Doge candles. So ultimately, we want to take a good look at those. Filled in or red candles indicate a downtrend. You might want to add your short position or your sell position or your exit position, ultimately to get out of the market when it is showing that there is a downtrend. Filled or red candles with no higher shadow identify a strong downtrend. Stay short until it changes in the trend. There can also be false signals, which are by the Doge candles. That again, we'll look at in a minute. So this you can use for making trade decisions. It's very interesting to see because looking here, which again, I will show you guys kind of a pattern in a minute when we actually look at KuCoin. This is used for a lot of investing. There are a lot of people who use the Heikin-Ashi method essentially to do all of their trading, but we want to apply it to our coins here, which is our cryptocurrency. So as you see right here, these are our candles. So we'll take these down a little bit. We'll make a little bit more room. So you look at our normal candles and we have a lot of ups, we have a lot of downs, a lot of different indicators here of what's going on with the market today. As you can see, ADA has been doing very, very well. And this is the common candlestick pattern. So you see, even zooming in here, we have some ups and downs. We have the lowest price down here, the highest price that it hit. The green candle is a uptrend in the price. The red candle is the downtrend in the price. But now we look at the Heikin-Ashi. So we'll actually go ahead and we will turn that on here and look at the difference. So even looking back further, you're looking at averages, you're looking at trends. So right here where we see in these red candles, a couple red candles in here, ultimately you can see that ADA is still in a strong uptrend, identifying that it is a position to hold. And if you look, I'm using the 4-hour candles, as you can see right here. So if you look even over the last, it looks like day, it has been on a slight uptrend with ADA Cardano working its price up. Even if you look back here, the price was roughly $17. Right now it is $1.70. $1.70. Right now it's at $2.30. So there has been a significant uptrend over the past week. You can also see the red candles here where it started a little downtrend, So let's look at that really quick. So this is where the method looks at the Doge candle. So what is a Doge candle? It is where there is a wick on both ends, just like we see right on this one. There is actually a wick you see on both ends. That is the indicator you want to look for when you're going to enter a trade or when you're going to exit the trade, is when it is showing there is going to be possibly a market change. So essentially, this is the way that I have been playing it. So if I see right here a Doge candle, I see an up and up. By the time this goes up, we already have a buy position in. So how do you figure out your buy position? I do both of these last candles, the highest that it peaked at the candles. Whichever candle is higher is the choice we're going to do entering a position. When it comes up a green candle, most of the time it will come up on a rise. Sometimes it does not. So if you're entering a position, like I said, I use the highest position of both of these candles. So we might buy in a little bit higher on the market. But ultimately we are seeing an uptrend in the market to go ahead and purchase in there. And a lot of times the wicks will be much, much higher than what you're seeing here. So essentially we would have bought in right about this back wick, which is about looks like about 164. We would have rolled this all the way up here till we got our another Doge candle right here. This Doge candle indicates there could be a change in the market. So if I was already invested in this one, we can actually put our stop loss again right below averaging the last two candles, or the lowest of the last two candles. So we put our stop probably right around here, just by chance. If the market does go down, will be sold out of the market, and that will be it. So if there was a big drop like what we see here, that would essentially be your exit strategy, putting your stop loss right below where we've seen the lowest candle. So ultimately, that is how I'm buying and I'm selling, and it's been working pretty well. So ultimately, when you do get some shifts in the market, and this is what you want to kind of look at. So here we've seen a big downtrend. So essentially the lower of these two, if we were selling out of the market, so we'd be just about where this downtrend went and it would sell out. We could also place a buy order on top of it. So we could do one buy, one sell on both wicks of the Doge candle or the one before. Ultimately, so if we put a sell order here or if we put a buy order, depending on our position, we could have went up if it went up, and we would have sold out if it went down. So making sure that you guys are putting stop losses in this are very, very important. Some of the other targets that you see up here, some of the other indicators that we have up here, of course, the MACD line. When the MACD is above, so when my blue line is above the red line, so the MACD line is higher, that usually indicates a buy position or a time that you should buy. Other thing that we look at is, of course, the RSI. So the RSI is comprised of overbought or oversold conditions, which, as you can see here, coming for ADA, it went very high. So it does a 70-30 line on the RSI indicator, came down a little bit, which was the slight downtrend we see right here. And then the price continued to creep up slowly, which even right now, according to this, since it is at a 79 RSI for ADA, it is considered to be very overbought, meaning people have purchased the coin, it has driven up the price. Usually there is a correlation with it. Even looking here at our blue line, it is still over this, saying that the volume is still there. People are still buying the coin, still picking up ADA, and the price will continue to increase. Two things to remember though with our method is right here. These are Doge candles. So it means there is a little upside, there is a little downside. So it might be starting to level out with the price, which is what we usually see. There will be a decline probably coming very shortly, which would be a decline down this way. We'll actually grab our little brush here, which would actually indicate a little bit of a decline down this way. Giving the MACD time to cool off, giving the RSI, as high as it is, time to come back down into this region, and then it could possibly pick up again after that. So essentially right now, that's what we're looking at. It's been hinging around $2.30 lately. We actually bought when it was down here, when this green candle started coming up. And this is kind of a unique situation right over here. Let me turn off my brush here. So looking back here, it is right here. As you can see right here and it kind of does draw it funny. There was no Doge candle. So this was a straight down candle followed by a straight up candle. So if there is an up candle that is a rise, I can put my purchase right above the top of that candle. That way, if it continues into a second candle into a rise, it will buy us into a position. If it continues down, so let's say this was just a fluke, this was just a one-off candle, putting the position above the wick of the candle allows us to, if it continues to go down, we are not going to buy it into a position. If it does go up, we are going to purchase into a position because it is continuing on a upslope with those green candles. So ultimately, guys, that is just a quick rundown of the position that we've been doing or what we've been working on here with a Heikin-Ashi candlestick pattern. Again, the candles here can be very confusing when you look at them in their entirety. The Heikin-Ashi just looks for trends, so it's way easier to read. You might not catch the breakouts quite as quick, but ultimately, guys, it shows you when to enter a position. It shows you when it's getting kind of leveled off, when to exit a position. So if you're utilizing this, it seems like it's a very, very good method. It's an easier method, especially if you're just starting out in trading, because you can follow the trends. You can actually go back through a couple such as Bitcoin, really follow the trend and see where it's going. And where Bitcoin has been going lately, it looks like, boom, we had a little up, a lot of down, little up, a lot of down, little up, and a lot of down. So right now, guys, the price of Bitcoin has been trending down for a significant amount of time. Remember, this is a 4-hour chart. Even if we go to the 12-hour chart, it looks pretty much the same. So we've had a lot of price action that has been driving Bitcoin prices down, had a little bit of recovery there, and then another surge, which is going towards the bottom. So guys, ultimately, like I said, that's the Heikin-Ashi method. Works very well. You can do a lot of research on it. It seems like you don't catch the market the second it shifts, but you don't also take massive losses. It's more about catching the upside of these candles and kind of selling out before the downside to pick up the next upside. So really changing your position. Another thing that you want to make sure you do with this is you use a longer candle. If you go to like a 15-minute candle, or even if you go to a 30-minute candle, a lot of it is not going to have enough time to trend. So I stay to the 2-hour, still seems a little buy here, sell here, buy, sell, buy, sell. I stick to my 4-hour candle, gives you a smooth looking pattern that you can see. So even here, if we were purchasing Bitcoin, we would have seen this as our purchase sign. So essentially we would have put our buy rate up above where our candle ended. We'd have purchased in there, would have went up, would have went up, would have went up. Doge candle right here, we would have put our stop right below where that wick is. Boom, as soon as it went down in the next one, we would have sold out of the position. So making this little gain in between these 4 candles, which essentially is, 4, 8, 12, 16, 20 hours. That is a 20-hour time frame right there, guys, at 4 hours each one. So we would have made what we did in 20 hours. Here, we would have been sold out of the position. It continued down. We would have already been sold out of the position, ultimately not suffering all of the losses that we see with Bitcoin. So guys, let me know in the comments what you guys think. Very, very cool method to go over and cover. Makes it very clean, very concise. Ultimately, with cryptocurrency, I didn't know if it would work. So far, it has been working pretty well, as you can see with ADA. It really, you really have to focus on what position you're going to take. Here, we're looking at DOT. You can see there's been a big uptick. Boom, there was kind of the sell-off. We had this big Doge candle right there, followed by a Doge candle, followed by a Doge candle, and then it finally broke down. So right now it's in a decline, and I keep a couple different coins up here and just watch what they do. So essentially, once I see a decline here, even here we have 20 hours of a decline. Our RSI indicator right here is at a 33, so it's by far oversold. So we're right in the bottom of that, meaning that a coin like 1inch is going to have a turnaround. Even looking back here, decline here, little increase, big decline, little increase, big decline. So we're going to pick it up when there is the little increase. And even here, the MACD is going the blue above the red, meaning that the price action should go up based on just charting. Same with Matic. Matic was the same. It's been brand new to KuCoin. Boom, we've seen a big uptick. Now we've seen a massive sell-off. So essentially there were gains, and now there is a decline, which looks like exactly what it's going to be for Matic for a little while. Once it bottoms out, then we'll see the gains with Matic coming right back up. XLM is the exact same. So we've seen a lot of declines. So even here we got some Doge candles, which it looks like a little increase there. We got a Doge candle, which was a little decline. So we would have sold out actually with a little bit of a loss here. But if you bought in here at the Doge candles, you would have had a significant amount of gain for a little bit of a pullback. Ones like this are where it gets really difficult because the prices are fluctuating a lot. As you can see here with Doge candles pretty much every time. And they have very, very long wicks on the top and the bottom. That is the reason. So even looking at these two here, we'll zoom right in. If we're looking to enter a position, it would be this candle or the last candle right above it. So we would have bought a position right about here. So ultimately we would have never entered this position because it would have went far. It wouldn't have went that high with the candle that was following. So we would have never entered a position into this coin specifically. So again, guys, let me know in the comments what you guys think. That is the method that I've been using. It's been working really well. So let me know what method you guys use. And as always, thank you guys for watching.